Hello, everyone, and welcome back to another episode of Coffee and Crypto. My name's Don. Thank you so much for tuning in and watching today's stream. If you are watching it live, hello, good morning. I hope you have your morning coffee ready, or you've had your morning coffee and are ready to get through today's episode. We have some big news to get through, of course. You've seen it from today's title regarding XRP, but also this is the first day in the new office. You may notice that the background is slightly different and slightly less busy as it once was before. I don't know which I prefer, but anyway, new office, hopefully better Wi-Fi. It's all happening today. XRP has had a bit of a spike the past kind of few days, but yeah, it's back down again. I'm going to chat about that plus loads more as always in today's stream, so make sure you are chilling or you're at work or whatever it is you're doing. Just make sure that you pay attention to everything that I say in today's video. Now let's look at the prices first and foremost before we move on into the news. Bitcoin's currently trading at $35,814. We then have Ethereum just below $2,000, sitting at $1,988. We then have BNB at $245 with XRP at 63 cents. Solana at $59. We then have Cardano at 36 cents. Dogecoin at 0.7. And then finally Tron sitting at 10 cents. So, bit of a mixed bag across the board. The past 7 days we are still up, which is what we like to see. But over the past 24 hours we did see a bit of a price decline. And that is potentially coincides with the CPI data that came out obviously from the US. That normally has some sort of impact, whether it's to the upside or to the downside in crypto, and this point, or the point that it made was it went to the downside. But look, we corrected a little bit, and let's just see where things go from here on out. Where do I think it will go? Well, I think there might be some sideways movement before we start to leg up that little bit more and continue on the steam of quarter four. We did do, or I say we, Deck did do a voice note update in Discord. So hopefully, if you are in Discord, if you're not, I'm not quite sure why, but obviously there's a link below if you'd like to join our CC Pro members community. But Deck could put out a voice note and some kind of information regarding how price action will occur, how it will affect you, and what our plans are for the next few months, or at least our expectations are for the crypto market. So yeah, go check it out if you're a member. It's in members updates, and if you're not, good luck. But anyway, let's move on to some news before I kind of cover off the XRP news, which I know most of you will be here for, to really find out what's going on with the XRP kind of price, and actually, is it going to be an ETF or not? Stay tuned for more on that. I will cover it near the end of today's video. So FTX BlockFi claims the settlement allowed to proceed, the judge declares. Now, I feel like that headline is a bit all over the place, but essentially what it is that a US bankruptcy court judge has ordered the end of an automatic holding placed on claims settled proceedings between the two bankrupt companies, FTX and BlockFi. So again, I shouldn't have to bring you up to speed. You should know this, but yeah, FTX and BlockFi did go bust in the past 12 months for very similar actual things. But if you don't know about that, go after this video and read a bit more about it. The kind of article then, so bankrupt crypto companies FTX and BlockFi are allowed to proceed in negotiations for their claims settlement. Now, on November 13th, the US bankruptcy judge Michael Kaplan ordered the end of an automatic holding placed on proceedings between the two firms. FTX debtors can now pursue their arguments. I knew that. Their arguments, defences, their counterclaims, their set-offs, or otherwise, concerning the BlockFi claims in the FTX bankruptcy proceedings. Now, I'll explain why these two companies have got anything to do with each other and why they're even being mentioned. So both entities filed for Chapter 11 bankruptcy in November 2022 after the implosion of the FTX at the beginning of that month in November. So it's been like 12 months almost to the date. BlockFi is estimated to have around $355 million of funds frozen on the FTX platform, with an additional $671 million owed by Alameda Research. So obviously this Alameda Research is the side company of FTX, is where pretty much all the losses were made, and it's what started the downfall of FTX, was this other company, Alameda Research, which was owned by SBF as well. So yeah, anyway, there's about $1 billion there frozen or owed, which is crazy. Again, it's why BlockFi had the issues that it had, because it kind of relied so heavily on FTX. Anyway, the order also said that the FTX debitors would have no right to receive an affirmative distribution from the BlockFi debitors, and that both parties should file a mediation with the US Bankruptcy Court of the District of Delaware as soon as possible. Now, once filed, mediation will begin no later than December 24th, 2023. So, yeah, it's looking like it's going to be an interesting Christmas for the BlockFi and FTX lawyers and people that are involved, because it's not over. Well, what's the saying? It's not over till the fat lady sings. Is that the saying? But yeah, it's not over yet. It's a continuation since last year at this point of just stuff going on, money being locked, people wanting money, people being owed money. Yeah, it's mad, absolutely mad. In fact, here's some videos here. That lady that you've seen here was SBF's, like, not her. You can see that on your screen. I'm pointing to just beside me. So if I do that person right there, was the person in charge of the Alameda Research kind of company, which was, like I said, the company that SBF was hiding all the money in and losing all the money. Anyway, I'll move on because there she's there. Can you see her on screen? There you go, the lady with the glasses. She's to blame. Well, also SBF is to blame, but anyway. Right, so an interesting one here then. So Goldman Sachs leads a $95 million funding round for the blockchain payments firm Finality. I think that's how you pronounce it. So this is obviously huge because not so long ago, banks hated crypto and blockchain and wanted nothing to do with it. But now Goldman Sachs, one of the massive kind of banks that we all know, are at the forefront at leading a funding round. So let me read on here and explain in a bit more detail. So global investment bank Goldman Sachs and French universal bank BNP Paribas have reportedly led a new funding round for Finality, a blockchain-based wholesale payments firm backed by Nomura Group. Now, Finality has raised 77.7 million British pounds, so that's $95 million for all you American viewers, in a second round of funding that was reported on November 13th, so just a few days ago. In addition to Goldman and BNP Paribas, the fundraising involved participation by settlement houses and the Euroclear and Depository Trust and Clearing Corporation. Other investors included the global exchange fund firm WisdomTree. We've all heard of them before because I spoke about them quite a lot when it came to the ETF, because they do have an ETF waiting for approval. And then Finality's existing investor Nomura. Now, there was also additional investment from initial round backers Banco Santander, BNY Mellon, Barclays, CIBC, Commerce. Look, there's loads. I won't go into them all. There's loads. Loads of banks are getting behind this. And as previously reported, UBS and other global banks invested £55 million or $63 million in Finality in June 2019. Aiming to launch a blockchain-based trade settlement platform. So, before I read on kind of into this, I guess the big point that I'm trying to make here is look at the names that are getting involved in this blockchain payment system. They are huge names in the banking industry. Banco Santander is obviously like the main part. We've all heard of Santander UK. Well, Banco Santander is the Spanish arm of that, and it's kind of like the original part of it. Yeah, it's the same company, essentially. It's basically like RBS and NatWest NatWest own RBS. They look like different banks, but they're the exact same bank, essentially. Same with Banco Santander and Santander UK. Anyway, a little bit of banking knowledge for you. But yeah, so the point I'm trying to make that even Lloyds are also majority of the biggest leading banks in the world, not just the UK, in the world, are behind and have already funded some of this initial funding round for this company, Finality, which is a blockchain payment company. So, watch what they do with their money, not what they say. You might think that banks are definitely blocking payments. It is getting quite annoying for some people. However, look what they're doing with their own money. Well, when I say their own money, I mean your money. So any money that you give to a bank, they use that to try and make more money for themselves. But look what they're doing with your money. They're investing in blockchain payment systems. So, yeah, very, very interesting. Now, the new capital will be used for setting up around-the-clock global liquidity management network for the new digital payment models in wholesale financial markets and emerging tokenized asset markets. Finality reportedly said that. Now, the raise also lays the basis for the commencement of the initial launch of the Sterling Finality payment system in 2023, subject to the approval by the Bank of England. Now, that's quite interesting because I don't know if any of you have seen it recently. I seen it on, I think it was like TikTok or Instagram last night, where you're seeing a lot more kind of AI development coming out when it comes to, I think the thing I actually seen was like passport control. So let me know in the comments if you've seen this as I'm talking about it. But basically what they're now trialing, I think the Emirates are doing it as well, where you will no longer need a passport to enter a country or exit a country because it's all facial recognition, and it's training the AI to know who you are. After you've kind of scanned your digital passport, it logs it on the system. The AI then tracks your movements in that airport when it goes to boarding desks and check-in desks, whatever it is, and it knows, right, cool, yep, you're supposed to be on that flight. You are who you say you are. I know that because, well, I'm AI and I know everything about you. So the reason I'm bringing that up, that might not seem like anything to do with payments or crypto. Why am I talking about AI facial recognition for passports? Well, one of two things. One, the control is insane. That's what they do in China with the kind of public credit system that they've got. Everyone is tracked by AI, artificial kind of facial recognition. You all get points, blah, 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 blah. Go watch Black Mirror. Go watch some kind of things on YouTube about the kind of system in China. But the reason I bring it to your attention is when it mentions here on this report about the payment system coming into the UK as well as, well, globally. That all, in my eyes or my opinion, coincides with CBDCs, which we spoke about a lot. CBDCs are also another form of control of your money. Again, more and more of that will start to come to fruition as you learn more and more about CBDCs and crypto and the government, I guess. But the reason I'm covering this article is because, yes, it's a great thing. It shows you that banks are doing, well, what they want, and they're not exactly doing what they say they're doing or what you think they're doing. They are investing in blockchain technology, in crypto projects, because they know it's the future. But before they tell you it's the future, they want to make sure they've got a massive portion of that. So yeah, a few points to this story. One, banks are investing in blockchain and crypto. Two, facial recognition is here. It's not coming, it is here in some airports. I think they're testing it in London and as well in Dubai with kind of Emirates. So it's here, it has arrived. It's only a matter of time before it is everywhere. And mark this video, this day, this time, this whatever, that it's only going to go one way. And yeah, hopefully you quite enjoy the fact that I've kind of went off a little bit from crypto, because actually with the Crypto Fast Track course that we did last week, I did mention that I'm really interested in AI tech, but I don't mention it too much on Coffee and Crypto because, well, it's not always crypto related, but AI tech can play a massive part with the kind of usage of blockchain technology, and without blockchain there would be no crypto. So look, it all works full circle. So I will be trying to bring a little bit more AI stuff as well to Coffee and Crypto. Not much, not much at all, but just when I see it, I'm going to bring it to your attention because, this should just be like a tech channel from now on. Let's talk tech. But no, in all seriousness, this is good news to an extent because we're seeing progression, but it's also not so good news because we're seeing progression and the people that are progressing it forward are not the people that we want to be progressing it forward, i.e. governments and banks. But anyway, that's crypto. Let's move on. So, next article then is from a country that is many people's least favourite country, but crypto is the second most popular investment asset in France, just behind, well, let's find out. So, this is an interesting one. So, cryptocurrencies are the second most popular type of investment asset among the adult French population, according to a survey by the Organisation for Economic Cooperation and Development, which is the OECD, if you really care so much about, published by France's principal financial regulator, the Autorité des Marchés. How's that for French, eh? Now, according to the survey, 9.4% of French population holds crypto assets, which is only marginally lower than those holding the most popular type of asset, real estate. A further 2.8% of respondents possess non-fungible tokens. Unlucky lads. Now, the survey also measured the group of new investors who invested for the first time since the C-19 pandemic in March 2020. The new investors are mainly men, 64%, and significantly younger than traditional investors, with an average age of 36 versus 51 for the latter. So in that category, 54% hold crypto assets. So this is a huge point because investing is a younger game now. If you go back 10, 15 years ago, no one of maybe your age, depending on what age you are, but no one of a younger kind of age, obviously, invested at all. The only investments that they made were investing in going out, so making sure they were getting a good pair of trainers or a good outfit for that kind of investment in their weekend. There was never any actual investments being made because, I mean, it was tough to try and, at that age, to try learn about these companies because you're not taught any of this in school. We all know that. So it was hard for young people to get involved in investments and make money for themselves. Fast forward to the crypto world that we all live in now, and literally from the age of 18, and I think some places allow 16, will allow you to invest in crypto. It's very readily available information. It's all over the internet. There's crazy people like myself that go live or do videos on YouTube about crypto. There's loads of kind of free ways to learn, and young people are switching on and realising that, well, I can't work all my life because that's not going to actually make me that much money. How can I invest and make more money? Well, normally people nowadays, or younger generation nowadays, are turning to crypto, apparently, especially in France. Now, the survey's authors also noted that the new individual investors have a relatively low level of financial knowledge, particularly those in the youngest age group between 18 and 24. They were more likely to give incorrect answers about basics of investment strategy than traditional investors. Now, of course, that is a slight downside of younger investors being invested. They haven't spent time learning about it. It's why companies like us exist, because we recognise that loads of new people and younger people want to get involved in crypto, especially investing in crypto, but don't know how or don't have basic financial knowledge. That's where we step in and we provide all of that. So yeah, if you are relatively new or you're young, 18 to 24 as this kind of survey states, but any age, whether you're old or young, it doesn't matter, we will help you out. If you want to learn more about crypto in general and basic finance in general, I've been in banking for 9 years. I know a little bit about financing. If there's anything that you do need, we can help. So yeah, click the link below in the video description to our website or Instagram or whatever it may be. Shoot us a message and I will be able to direct you on what you should be doing and where you should be moving in the direction of. So yeah, anyway, a little bit of a side step there, but let's move on to the next article. Now, the number of Bitcoin millionaire wallets triples in 2023. So this is, of course, positive and very, very good news for investors in Bitcoin. So the number of crypto wallet addresses holding more than $1 million in Bitcoin has tripled this year. BitInfo Charts data shows the number of addresses with more than $1 million increased from 23,795 on January 1st to 81,925 as of current. That's a 273% increase in 11 months. So congratulations and welcome all of the new Bitcoin millionaires. It is good to see you all. But yeah, 2023 has only just started to heat up and we are early. Well, I say we're early into November. We're at the midpoint of November. So yeah, is it up only from here on out? Stay tuned and you will find out. Now, the millionaire wallets are not one-to-one with individual users, as many addresses with more than $1 million in Bitcoin belong to crypto exchanges and financial institutions. Now, comparative data from Glassnode shows the number of addresses holding more than $1 million in Bitcoin peaked during the top of the last bull market in November 2021, posting a record 112,573 addresses on November 9th, 2021. The day before, Bitcoin notched its all-time high of $69,000 on November 10th. It's crazy to think 2 years ago, well, over 2 years ago now, Bitcoin was at its all-time high. Doesn't really feel real. Again, depending on how long you've been in this game. I've been in it for a long, long time, 7 years to be exact. And the past 2 years have been interesting, to say the least. They have been up and down. It's been long, but it also feels quite short when the thought of only 2 years ago, the $69,000 was printed for Bitcoin. But yeah, does anyone remember those good old days when everything was just easy? Money was just flowing. The good old days. They're coming back. They are coming back. Now, meanwhile, the number of so-called whole coiners, which is wallets with a balance of at least one Bitcoin, has increased slightly since the beginning of the year, and it's an increase of about 4% since January of this year. So look, as long as the outcome is income, as long as the upside is upside, I'm just making up sayings here, that's all that matters. As long as we're trending upwards, I'm here for it. I'm on board, and it means that people are making money, which is fantastic. Okay, now moving on to the XRP news. I know you've all been waiting for this XRP news. Sorry for keeping you 20 odd minutes into this video before I covered it, but such is life. So, XRP spike on hoax of filing is a bad look, but it won't sway SEC's ETF approvals. Now, you may have noticed that the other day, I think it was Monday, there was a massive 10% spike candle in XRP, as apparently there was an ETF filing for XRP. So, November 13th, so yeah, it was Monday. Price action stemming from the falsified BlackRock XRP's trust filing shouldn't sway the US securities regulator's decision to approve or delay a spot Bitcoin ETF, but it isn't a good look, say industry observers. Now, I don't think I really agree with that, but anyway, let's read on and then we'll give you more on that. So the US SEC has previously claimed that the Bitcoin market can be manipulated and has knocked back spot Bitcoin ETFs, citing a lack of market manipulation controls. Now, it's funny that because we all know the SEC manipulate the market and governments manipulate the market, but anyway, who am I? That's just my opinion. Now, Bloomberg's analyst told Cointelegraph that the fake XRP filing should have little to no impact on the SEC's final decision. Now, I do actually agree with that part. I don't agree with people saying it's not a good look, but I do agree with it being no impact, essentially. So it says here, we doubt this will impact the situation with the spot Bitcoin ETFs. He said, however, he added that the incident could validate the SEC's beliefs. There's no doubt It is a bad look that arguably validates the fraud and manipulation that the SEC used as grounds for past denial. I guess so, but November 13th, the filing on the Delaware list of corporations website showed BlackRock creating the iShares XRP Trust and Persecutor for launching an ETF. So again, this has happened before. We've seen Bitcoin and Ethereum ETFs being launched on there. Just a few weeks ago, we've seen a Bitcoin one being added, and that's what caused the market to go insane, apparently. But the filing resulted in a 12.3% spike in the XRP price within 30 minutes before it tumbled back down to just as quickly it once kind of was before the hoax was kind of, put out there, I suppose. It's not a great look, but in my opinion, it's not the worst thing. I'll tell you why. In fact, you know what? I'm going to tell you why right now. Let's jump straight into it rather than reading that article, because it does kind of just go on and kind of say the same thing. It's not a great look. It is a great look. It could impact. It might not impact. It kind of goes around in circles, but I wanted to use that article as a lead on to this part in the video. So, if you remember when the Bitcoin ETF went, berserk on this Delaware website, it was because it was launched and the name, is it EBTC or something, whatever it was, IBTC, was added to this website. Now, this website is needed. It's almost like a domain. I covered this. Go watch. It's a couple of videos ago, but I mentioned that these names that are added, so whether it was iTrust Shares or whatever it was called, iShares XRP Trust, that's almost like a domain name. So for a website, if you're creating a brand or a business, whatever it may be, you want a website, you go and buy that domain. So we have CCGLA as our domain name. We had to buy that and we register it every year to keep that name. We then use that as our company kind of domain. And that's the same as these trusts. So the XRP Trust or iShares Trust or ETF Trust, whatever it is. It's essentially just a domain name. So I actually think it is a good thing because it shows that they are trying to secure these names. So BlackRock are trying to secure iShares XRP Trust as an ETF fund because they believe that their customers do want to invest in XRP, much like they want to invest in Bitcoin and they want to invest in Ethereum. That's why ETFs are being requested. Look, for me, I would never use an ETF to buy crypto because it just doesn't make sense. It goes against the ethos of crypto, in my opinion. But many big millionaires, billionaires who don't really care so much about what they invest in, they just want to make a lot of money from their investments. They can't invest in these assets until they are ETFs and they are looked after by an asset manager, essentially. So that's why ETFs are important. That's why I have spoken about them a lot. Will it cause a dramatic increase in price? Yeah, probably, but it will also coincide with market behaviour because we've now waited over 2 years since the all-time high. We're now starting to heat back up. The Wyckoff accumulation phase is almost over when it comes to looking at charts. What happens after that? Well, upside is what happens after that. We have the blockchain halving or the Bitcoin blockchain halving reward coming just 5 months away. There is a lot of chart behaviour coming up, but there's also a need for the news and the narrative to follow that. I strongly believe that the ETF news and narrative will be the new kind of leader. So back in 2019, 2020, we saw inflation and the kind of global shutdown as the leader of printing money, and that was like what pushed crypto because of the money that was flowing in. Well, fast forward a few more years, we're not really in that position anymore in the world. Yes, we're still printing money like there's no tomorrow, but what causes crypto to really rally in price is obviously inflow of new capital. How do you get that inflow of new capital other than just printing money beyond belief? Well, ETFs will allow for that. There is trillions and trillions and trillions and trillions and trillions and trillions of dollars literally locked up with these asset managers. And the whole point here is when an ETF does get approved, that money will start to flow into the crypto market. And that's when we'll see the boom coincide with potentially the blockchain halving, where supply goes by half, demand will grow by, hundreds, if not thousands of percent because of ETFs that are now approved and more access to this asset class with less supply. Hopefully you're following along here, but the point of the actual article here with XRP, I do think that there will be an ETF for XRP at some point. Do we need one? No, we don't. We definitely don't need one. But will there be one? Yes, I do believe there will. Same as I believe that there'll be a CBDC. We don't need one, but there will be one. It's just part of how this game is going now from, well, as it's grown from a kind of underlying like cryptic technology no one really knows about to, well, everyone talks about it, everyone's involved in it, everyone invests in it. It's just a natural progression for cryptocurrency and blockchain technology as we know it, as it starts to kind of proceed into a daily usage or at least a daily use case in everyone's kind of walk of life. But anyway, that was a bit of a rant. Hopefully it made a bit of sense. Will this mean that XRP will shoot up in price? Well, actually, as I've just mentioned, if the ETF does get approved, it does mean that more fresh capital can flow in. What happens when fresh capital flows into the crypto market? Prices go up because supply is quite low in the grand scheme of things, but demand is going to be even higher than it was before. So yeah, supply and demand. Look into how supply and demand works. It's not just a crypto thing. It happens everywhere. Google it. Supply and demand. What does it mean? And yeah, enjoy whatever you find. But anyway, that's all for today's video. Thank you so much for tuning in and watching this episode of Coffee and Crypto. If you did like this video, please drop me a comment. Let me know your thoughts, how you felt about this video, and of course drop it a like as well. That would be great if you could like the video and go back and just like every single video on the channel. That would be great. I would really appreciate it. If there's anything that you need from myself or anyone on the team of Certified Crypto or Crypto Glasgow, because we do have two companies, remember, doing different things in crypto, there is links to everything below, including what crypto exchanges I personally use, and yeah, you can go check them out, read more about them in the description below. Now remember, nothing that I say is ever financial advice. I am not a financial advisor, so I can't tell you what to do with your investments. What I can tell you though is, if you want to learn how to invest, if you want to learn about crypto, if you want to learn about basic finances, come to us. We will help you out. There's links for everything in today's description. But that's all for today's video. Thank you so much again for tuning in to Coffee and Crypto. I will see you all again very, very soon for another episode of Coffee and Crypto this week. And yeah,